Hi, everyone. I think if you look at my LinkedIn profile, it probably looks like quite a cookie cutter, typical finance career. College in the US, investment banking in New York, MBA, and now a 12-year stint at Kedaara, which is a homegrown private equity firm. But of course, there's always more than meets the eye, many ups and downs along the way. Kedaara was started in 2012, and I was lucky enough to join the team when we didn't have a single dollar of capital committed. Today, we are at $5.5 billion of AUM. We've invested in 30 businesses across 4 funds. So it's been really an incredible journey in a very short time frame. But I don't think we would have reached where we are today without making a lot of mistakes along the way and learning, adapting, and adjusting as we went along. So today, instead of talking about a lot of the successes, I thought it would be useful to talk about one of our biggest failures, which was a complete write-off and took up pretty much 6.5 years out of my 12-year career. So in the early years of Kedaara, things were going much better than we imagined. We raised a very large first-time fund, the largest for India in 2012. We did a few good investments, and even in 2016, we had our first exit at a 50% IRR. So things were going quite well. In 2017, our confidence was really high, and we took on our most ambitious investment, which was a 100% buyout of an auto components business. The thesis initially was quite sound: buy the business really cheap, bring in new management, invest behind growth, and then sell to a larger player down the line. And of course, a 100% buyout meant that we were completely replacing the founder, the promoter, and really stepping into the promoter's shoes ourselves. So as you can imagine, things didn't go really the way that we had hoped. In early 2019, the auto industry started seeing a huge decline, and all our customer volume started going down. That led into COVID in early 2020. And so what was a 120, 130 crore per month revenue business eventually became a 70, 80 crore per month revenue business. So huge declines. We had actually invested a lot of money in a new plant where the volumes didn't come either, so the utilization levels of that plant was very low. And so we were dealing with a balance sheet that had a lot of leverage, a lot of stress. The operational issues also started piling up. So it's very difficult to recreate some of the situations, but you can imagine every month, every quarter, literally from pretty much 2019 to 2023, 2024, we were sitting in a boardroom with the management team, arguing, fighting. Company was going to losses. How will the cash flow change? How will the profitability turn around? And what's going to happen? And meanwhile, we had customers calling us incessantly about quality issues. We had bankers calling us, threatening to recall their loans. We had suppliers calling us for their payments. And the most scary part was we had the labor union demanding their wages and their job security. So it was really a downward spiral. And all this time, through the years, at Kedaara, we had to keep answering the same question: that do we keep going? Do we walk away, or do we keep putting more capital into this business? Do we keep restructuring the loans to buy more time to wait for something to really turn around? By April, May 2024 is when things really came to a head, and we had pretty much run out of cash. We didn't have any more capital to put in the business, so we were pretty much staring at bankruptcy. And that was the time when a large strategic player stepped up, saw some value in the business, and made a bid. And of course, we were not going to get anything out of that deal, but they were willing to put in some rescue capital into the business and take it over and try to turn it around themselves. So October 10th, 2024 is when they eventually took over, saving the company and all the 6,000 employees in the company. And of course, that's a day that is very close to my heart. But as we reflected back on this journey within the firm, of course, we started asking a lot of questions to ourselves that, look, what went wrong and what could we have done differently? What could we have improved in this situation? And of course, we took on way too much risk in this deal to begin with. I think there was way too much to be fixed, and we just didn't have enough time or capital to do it. But more importantly, I think we could have walked away much sooner than we did. And I think the reason we didn't is because a lot of the decision-making biases were really clouding our thinking. And these are common biases that all of us go through in our decisions as we make in different areas of our lives. But some of these, to start with, we were very overconfident. I think we believed that we could solve any issue, solve any problem. And that belief really blinded us to the reality that some problems in this company really could not be fixed, or maybe we were not the right people to actually fix them. We also had a lot of groupthink. I think when we sat down in meetings, each of us may have had a lot of individual doubts that, hey, this may not really work, but it was always washed over with a collective optimism that, hey, let's try this, let's try that, something will work out, let's give it another shot. And a lot of misaligned incentives. So we had the management team whose incentives, of course, were to keep their job, but also to convince us that, look, something will turn around in this business. And what was in their best interest was certainly not in Kedaara's best interest. So you had a lot of different stakeholders with different incentives. And so whenever we used to talk about walking away, it always seemed like the easy answer, right? It was always like, oh, walking away is giving up, we can always walk away, but let's keep going. And that was really what was playing in our minds. So the fact is that walking away for us would have actually been the hardest decision of all, because it would have forced us to really confront our egos, accept the loss, and really be honest with ourselves about what was possible and what was not possible. So as a firm, of course, we've done many more buyout investments since then, and most of them have been successful. Each of them have had their own share of challenges, but nothing as crazy as this. And we've done a few small things internally to really help us deal with these biases and confront them much more openly, much more transparently. For example, in team meetings, having younger members of the team speak first so that everyone has a voice. Making sure that all the discussions don't happen with the same 5-6 people every time, so that you're just rehashing the same thoughts and the same ideas, and bringing in new people in the team, or doing the discussions with all 30-40 people in the team to really bring in fresh perspectives, or even something as simple as putting a slide in each of our investment memos that really makes the team write down what biases they're thinking through and how they're going to overcome the biases. And I think that's really what is so great to me about investing, is that investing can really be the most brutal and the most fulfilling profession at the same time. Because the journey to become a good investor is really a very personal journey. It really demands you to confront your ego. It demands you to confront your biases. And it will demand you to be completely self-aware about what your own motivations are and what your own limitations are. So I hope sharing this story helps you reflect on your own journeys, whether it's managing a difficult project or navigating a complicated relationship. Be aware of the biases that are keeping you stuck, and don't let fear, pride get in the way. And if you realize that something really isn't working, then I would suggest don't be afraid to walk away, because it really may be the first step to finding something far better. Thank you.
Thank you, Ashay. We'd now like to open up the floor for questions.
Hi, Ashay. Thanks. That was really, really great. Uh, Wanted to ask you that when the final restructuring happened, and you all got, let's say, the larger corporate to buy out the failed investment. Um, when you had your final meeting with respect to the causes of the failure of that investment, what were some of the um, key emotions that were first experienced? And secondly, was it a sense of relief, or was it a disappointment that it was finally out of your system?
Yeah. No, it's a great question. I think on October 10th that's the date that I was talking about. And I honestly, when the date was coming, I really felt that I would be so relieved that this thing was finally over and off of my plate. But when it actually came, I think it was much more disappointment and sadness in some sense, rather than anything else, because I think it was just the realization that, look, we've just been through so much, and we probably made so many mistakes as we went along, and everything ended up just coming to zero, right? And interestingly enough, I probably didn't mention this, but we actually had to put in more of our own capital to actually make the deal happen. So for the buyer to take over the business, we had to put in like another $20 million to actually make the deal happen, right? So instead of the buyer paying us, we were effectively paying them. So it was obviously bittersweet, but I think sadness, disappointment were just the primary emotions that went through us. I think at a firm level, we were, we had just been stuck with this for so long that I think everyone was, of course, celebratory in that respect. That okay, look, at least we're done with this and we can move forward and actually internalize the learnings from this. So there was that aspect at a firm level, but personally, I was more sad than anything else.
So you focused a lot on the errors and the biases once you'd bought the business. Would did you have any learnings on what went wrong in the due diligence maybe early on? So was it the right decision to buy or not? And then the second question, the new buyer, how well is he going to do? Does he do things better than you do?
Yeah. So, so look, I think I can talk about the due diligence and what went wrong for hours actually. But I didn't mention a lot of that, of course, because just given the audience. But I think it was not the right deal for us to do. And what went wrong in the diligence, I would say that look, automotive is a very cyclical industry, right? And we had gone through a period of time from 2013 to 2018 where it was just a one-way street. And I think for us, we pretty much just extrapolated that going forward in our projections. And that was not the reality, right? And things changed within 6 months of the investment. So I think in cyclical industries, you have to project things very differently. And you have to factor in, let's say we underwrite an investment for 5 years. In cyclical industries, 2 out of those 5 years have to be at zero, right? And 3 out of the 5 years may be at 25%, but so you're averaging out at like a 12% growth rather than taking a 20% growth. So of course, I think a lot of those things definitely we didn't do well enough when we initially did the investment. And the one thing I mentioned, which is also that I think what we realized is in a buyout, especially in a 100% buyout, taking on too many things is not going to work, right? We don't have enough time as a private equity firm. We want to be able to come in and go out within 5 years and ideally within 4 years. And you can't expect to, change the entire management team, put in new capex, put in new capacities, win new customers, cut costs. You can't expect to do all of this in such a short time frame, right? And I think that leads into your second question, which is that, we were not the guys equipped to do this, but the guys who took over are a large strategic in the same industry. They've done this before. They've run the same business for the last 25 years, and so they'll definitely do a much better job than us. And a lot of the pain we have already taken, right? In some sense, when they came in, we cleaned up the entire balance sheet, right? All the debt went to zero. So what they acquired in terms of a balance sheet was extremely clean versus what we were dealing with, right? So I'm sure that they'll be successful, and I hope that they'll be successful. The one good thing is that they actually retained every single employee for now. Let's see what happens. But so the entire team is still there and still working. And they've also managed to shut down one of the plants, which was our highest cost plant, where we had a union. So they've actually disbanded the union as well. So a lot of positives to start with. Let's see where it goes.
We'll be taking one more question. Yeah.
So obviously this whole experience that you had resulted in quite an extended period of stress in your organization. Yeah. So how did you maintain your working environment and team morale and things like that during this quite 6-year-long period of stress?
Yeah, so it was a very interesting evolution in terms of just to give a context, Kedaara is about 40 people, right? And say maybe 4 or 5 people were working on this investment, including myself. So obviously there was a lot of other stuff going on, a lot of other investments and a lot of other stories going on. But for us, I think the team actually revolved quite a bit. And, this was the deal that no one wanted to work on, right? So I had to sometimes force people to work on it. And of course, everyone was trying to avoid it because everyone knew it was pardon the language, but it was a shit show. So I think the morale was definitely that, okay, look, what can, within the deal team, I think we were always trying to make it work, and I think everyone outside realized that, look, these guys are really working hard trying to figure things out. And it was just so much firefighting. Like, there were periods of probably in 2019-20 and then 2023-24, those 2-year periods, there was just so much firefighting that you didn't actually have time to think, right? You were just on a roller coaster, just trying to figure out that this is the next problem, how do I solve it? This is the next problem, how do I solve it? And so there was no time to really step back and assess and do all of that. And my wife is sitting there, and I think she remembers all the stressful periods at home as well. But yeah, I mean, there was a lot of anger. There was a lot of emotional outbursts. I think I've probably screamed at my team, at my son, at the team for this deal more than I've raised my voice at anyone, right? So yeah, it was extremely stressful. But I think the entire team had to obviously support us and say that, look, guys, let's just try to get to the finish line, and let's try to do whatever we can to get ourselves out of the situation.